deep in the money, 2,405 put. It was $413.50. Kareen, see how they all followed you?
Yeah.
So you're going to have to go up to 111 and see if they take you. It's a $500 premium, but who cares? It's a $413.50 was the last print. And on one contract, you're saving $30,000. So if you don't work the bid and ask, you're going to have to take it up to, I would take it up to 111, cancel all, take it up there to 111, and make them hit you.
No, that was me.
All right.
You see how it goes like
yeah,
down?
Once you drop the bid, I can see how it goes down. That's why I got to have you timely canceling all. All right. Now you go 110. So 110.50 is back there. That's you, right?
That's me.
All right. So from time to time, you're going to watch the low. Okay, he hit you. You're hit on a 300.
See the print?
Yeah, I do. And that's $303. That is $30,000 worth of risk that you took deep in the money. $2,405 put on this Nasdaq 100 for 317, 2012. Right here. And it's marked down $303. What does that make you feel like as a beginning market maker? You know that there's risk because the bids earlier was 105, but it doesn't matter. You created a $303 markdown, didn't you, Kareen?
That's correct.
And how do you feel about that savings of risk? To be involved in deep in the money, as volatile as Nasdaq is, and starting 2012, wholesale at $303 in the contract.
I feel confident about that.
Okay.
Entry.
I do too. I don't know that you'll ever get very many times in your lifetime to ever make that kind of transaction. Do you hear me?
Mm-hmm.
And I really mean that because I've been in this business a long time, Kareen, and you just stole the bid at 110 out of everyone in the world, Kareen. Out of everybody that ever existed in this business, all the top trading desks in the world, all the big hacks, people that I know, they can't do that, Kareen. What you just did. And you're already up. Look, it's 1260 on the ask, and you ain't got to chase it. Do you see what you just did emotionally to all the professionals around the world and in the pits? You have just created a monumentally emotional event because you marked that thing down $300, Kareen.
That's correct.
I don't know if you really understand how monumental that is, do you?
I am learning, Mario.
Right. I will bring any professional level market maker in the pit, and they will tell you that this does not happen. The public will never ever get this opportunity. Only the people that once we created the bid and the ask, and now it's $2 wide, and it'll be like that for a period of time. As you know, it was down at $105 earlier on the bid and ask, or whatever it was, 105 by what, 108 or 107 or something like that. So what will end up happening over time during the earnings season and the volatility is that when we do get a pullback in the Nasdaq 100, because it's so deep in the money, they're going to let that ask rise very quickly. You hear me?
Mm-hmm.
And one contract, do you realize that you created a $30,000 markdown in the contract just on one contract entry?
Yes, I am looking at it.
Yeah. And that's what you did. So you got to know the cost savings of $30,000 of risk. And now we will see if you know that they can just drop bids. That doesn't mean anything because no one else is willing to sell. They were never willing to sell when it was up here on a closing price of 413, were they? So their behavior is now that we made this market, we're going to see if other transactions follow in this area. And your entry 110.50, and once again, everyone, there's always risk, but it's about taking the risk out. And that's what we did. And that's how we made a market. And very seldom in our opportunities from where we're at in this bear and bull fight for calendar 2012 that this is still in the money by $50. Yes, there's still downside risk. Everything still has downside risk, but at least we're minimizing the maximum risk that we could on our first entry transaction. Congratulations on the bid and the ask, Green.
Thank you.
And making a market like this deep in the money that other professionals cannot even operate in because the option market and the index options have changed dramatically.